Okay, Rob, it's been a long time. We've had a great summer, few lake trips, a lot of fun, but it's time to lock in. It's the fall and we're closing out the year. I know in the past for the ROBcast, we've done kind of like coffee talk, coffee hour, but we're going to sort of tighten it up a bit and go from coffee hour to just a quick espresso shot of a ROBcast. Okay, so I'm going to have three burning questions that I'm going to ask you, and we'll do them rapid fire. And then we'll do that again in a few weeks after the Fed has their meeting, and we'll kind of regroup and see what the next update is at that point.
Sounds great.
All right, sounds good. So when we hear the Fed, the Federal Reserve is going to cut rates, what does that actually mean?
What that means is that is what banks charge each other who lend money. Okay. What you'll see, what the all of us will see when they drop rates is the rates on their car loans, their credit cards, their personal loans, because that's what you go to the banks for. Those loans will drop. Those rates, excuse me, will drop. So it'll be cheaper to go get a car loan. Your credit card, actually, that is adjust monthly, will drop. Any personal loans you get will drop. Equity lines are also known as seconds on your mortgage. Those are directly tied to what when the feds are dropping the rates. So a lot
Okay.
of people's equity line right now is somewhere between 7.5 and 8.5, depending on. That's going to drop when the feds drop when they anticipate the anticipation of feds dropping the rates next week.
Okay. So when the Fed cuts rates, the Fed rate, it's not directly cutting mortgage rates.
No, it actually has very little to do with mortgage rates. Mortgage rates are more tied to bonds. Now, if you look at the bonds and the treasuries, we're expecting the feds to drop the rates. Okay, mortgages are expecting for the feds to drop the rates. So in the last 7, 8 business days, mortgage rates, excuse me, have come down. They've come down probably an eighth, a quarter to 3/8 in rate. The reason that is because the bond market has been going down because it's going to be cheaper to borrow money. It's going to be cheaper for the banks to borrow money, so the bonds aren't worth as much, and that will drive your mortgage rates down for homeowners.
Okay. Okay. So when the Fed meets again on the
Hmm.
16th and 17th of September, and if they say at that point, okay, we're going to cut the Fed rate, for example, by a quarter point, you said, um, will that influence interest rates to go down?
No, not necessarily. That influence has already been taken into account in the last 7 to 10 days. Like I've been talking about how rates have dropped. I'm sure if you see
Yes.
on Yahoo or wherever you go, you'll see mortgage rates are dropping. Well, the Fed hasn't dropped the rate yet, so how can mortgage rates be dropping? Well, they're dropping because we anticipate them to drop the rates on the 16th, 17th. Now, what'll influence tremendously that day is how much they drop it and what they say, what the Fed say in their comments. We are expecting a 0.25% drop. Let's say, for example, they drop 0.5%, okay, which we're not expecting, but they drop 0.5% and say we're going to be more aggressive and cut rates, again at our next meeting. That day, then you might want to call your mortgage lender and say, or if you're on the fence about buying, and say, hey, we need to move because mortgage rates will drop. If they say, hey, we're going to drop it a quarter right now, but we're still concerned about inflation. We're still worried about inflation. This will be the only drop of the year. You will actually see mortgage rates go up that day. And what happens every time, it depends on what they say, is we'll get called, be like, hey, the rates dropped. I want to refinance. Or why isn't my rate lower? Well, the rates actually went up. So the key is going to be how much they drop it, which we anticipate a quarter, and what they say,
Okay.
meaning coming up in
So
the future.
got it. So we know, as you mentioned, in the last 10 days, there's been a dropping happened in the mortgage rates, which is influenced by what is projected to happen with the federal funds rate next week. Am I
100%.
accurate? Okay.
100%.
And then secondarily, we're also concerned with what their comments signal for the future for the rest of the year. And if
And
they say
projection for next year.
and projection
Yep.
for next year. So if they
Yep.
say, hey, yeah, we're cutting this quarter point, but we're not intending to cut. We don't suspect that we're going to cut very much for the rest of the year and next year, then we're almost at a standstill or maybe even a rise a little bit.
Totally.
Versus if they say we're cutting a quarter point, we suspect that we're going to cut in the subsequent meetings leading up to the end of the year, then it's like game on. We're on, these things are going down and
Yes.
get ready
Yes.
to buy.
Exactly. And in our industry, that's what we're hoping for.
Okay, got it.
Yep.
Got it. Well, I think we had our espresso shot. I think we pretty
Okay.
much covered everything. Is there anything else you want to leave us with today before we meet again towards the end of next week after the Fed meeting?
No, I just want to say that maybe we can make a little remembrance today for 9/11 and for say a little prayer for Charlie Kirk and his family. That'll be it.
Amen.
Yep.
Appreciate it. Well,
Yep.
thank you, Rob. We will see you at the end of next week and we'll have an update. We'll have an update then.
Okay. Sounds good, Nancy.
All
Thank you.
right. Thank
Bye.
you. Bye.